Dollar danger with big tariffs incoming once again from Donald Trump. And we do have the key non-farm payrolls data this week. How is the dollar going to react? Guys, let's break down everything on a macro and technical level. Let's jump straight into this. Hey, baby. Happy new incoming week. I hope we are all well and truly lit. Yes, come on. We are back with another week in these beautiful markets. Guys, this week's going to be interesting. Okay, it's a very, very big week in the markets because we have a very key date, which is April 2nd, where we're expecting some fireworks potentially from Donald Trump with these reciprocal tariffs. Now, for anyone unaware, obviously Trump has come into play as the president of the United States, and he's very keen to reduce the deficit, the trade deficit that the United States has with other major economies, his trade partners. So Trump's really keen to just narrow that deficit. He doesn't like how, the likes of Japan, Canada, Europe, Mexico, a lot of these other economies, Australia, have a China, have a massive, well, not necessarily massive, but a very chunky trade surplus over the United States. What does that actually mean? It means obviously the United States is buying more from these guys, um, bringing a lot more in than they're getting in themselves, like getting out, excuse me. So let me make that very clear. So it's like almost a one way. It's not really a trade relationship as such as Trump sees it. He just sees the US just paying you for all these goods. You're not really doing any buying much of us from the United States. Obviously, there's reasons for that, guys, but you're not buying much from us. So we want to reduce that deficit. We want more income from you guys, basically. So that's why he's talking about slapping on these tariffs. He wants to narrow that deficit that the United States has. He wants the United States. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price has spiked here because of this fundamental reason? I don't understand it because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Have a surplus, that's what he wants. But really and truly, what he's going to get is just try and narrow that deficit and make things a little bit more competitive, a little more fair. That we're doing sort of equal business, if you like, and it's not just the United States buying from everybody else and reliant on them. Does that make sense? So that's why Trump's doing that. But obviously, this is causing a lot of uncertainty because no one knows how deep these tariffs are going to be. No one knows really the implications. Obviously, we know the implications could be largely negative, and no one's really going to come out as such as a massive winner initially. It's quite a negative because it disrupts business, all right, and it disrupts consumers as well, right? If prices of goods and services are going to rise because as tariffs have been slapped on to certain goods, people are going to be reluctant to spend, and then obviously if people are reluctant to spend and buy, then what's going to happen to the economy? The economy starts shrinking for everybody. So that's why it's not really, no one really wins as such. But I understand to some extent why Trump is doing it. I at least understand why he's doing it. Now, with that being said, you know how we were talking about before Trump making the United States uninvestable? It's still a lot of uncertainty around the US economy, and which is why that rebound last week wasn't forceful for the dollar. And we had supportive factors to see the dollar pushing to the upside, but people are cautious still because they know that these implications of these tariffs can harm the US economy, at least in the short and maybe even medium term. They can harm the US economy. Okay, they're going to disrupt business. It's going to make goods coming in from into the United States a lot more expensive. It opens a whole wave of different problems that the economy, the current state of the global economy doesn't need right now because we're already in, how I was speaking and warning you guys before, we're already in this period where we've had obviously the boom, we had the bust from the pandemic, We had the boom of all the stimulus that's been pumped in and the low interest rates. Remember, everyone was going crazy. They're like, let's borrow all this money. Let's go and pump out stocks. Let's go and pump out crypto. And then obviously central banks started tightening of all that stimulus. They started withdrawing some of that stimulus they're pumping into the markets. They started raising rates, tightening policy. So of course, costs went up. We saw a drop in riskier assets. And now, obviously, once again, we're in that cutting cycle because growth is slowing down. Inflation is coming down a little bit, but it's still sticky in some major economies. That's why we're dealing with this. You keep hearing the term stagflation because prices are high in certain economies while growth is low. It's contracting, it's falling. So we are in this sort of cycle where we're heading to another potential bust. It just depends how how much how forceful will that bust be? And the trade war situation could further speed us up, as I said to you guys weeks ago, further speed us up to that bust. Now, obviously, look, at the end of the day, our role is to trade what we see. Our role is to understand market narrative. Our role is to leave our ego at the door and understand why markets are moving the way they are. Obviously, we looked at a bounce last week, and now we're looking like we're under pressure again. The roller coaster continues. But if we just look at the monthly right now, because obviously we're heading into the end of March already, which is pretty much insane. I don't know how we're entering to the fourth month of the fucking year. Excuse my language. But the way things are shaping up here for the dollar specifically looks vulnerable, right? And I want to come back to this in a moment. I just want to quickly show you just pull up the calendar here last week. So last week, this week, let's just filter everything out. None, bar dollar. So when we look at data, services PMI, I said to you guys, are strong. 54.3. The US is more so services, much more than services in comparison to a manufacturing economy. Okay, big number there, big number, previous revised higher. Then when we go down, okay, a bit of softening in the home sales data, durable goods data was good. Weekly unemployment claims, 224, still steady. Final GDP, higher number there, 2.4%. The Fed's preferred measurement of inflation, 0.4, still sticky inflation. Personal income higher, 0.8%, but the previous was revised slightly lower. Spending down a little bit. Consumer sentiment down, which we know. I mean, consumers are not overly confident at the moment because of the uncertainties of all these tariffs and inflation. Okay. So, but overall, generally speaking, right at this current time, the US economy is still in a stable place as an economy as a whole in comparison to a lot of its peers. That's why it's the largest economy in the world. But dollar remains vulnerable. Okay, now let's look at this. Monthly, obviously reversal doji, big rejection up there, 110, validated by that closure below in February, and then big selling in March. Filled that week of February and big selling in March. Now look at that candle here. Obviously, what does that suggest? It suggests probably going to have another month of selling, another month of selling, potentially in April. Unless some sort of miracle happens and we manage to come all the way up here, which I highly doubt, and form a big bullish pin bar. I see that's very unlikely, to be honest, guys. Okay. Obviously, on the weekly there, you can see finished in the red. And when we go to the daily, it looks vulnerable. Okay. And we're going to talk about the fundamentals this week, but look at this. I said, didn't I note the risks of this? If we didn't form a nice big bullish candlestick this week, we had the risk of this. And ultimately, what are we still doing? We're still respecting structure right now with these lower highs, lower lows. I've had a pullback, bit of consolidation, some of it's being sold again. And I get that, not I guess, I know this comes down to markets being cautious. And back to that, what I said before about Trump making the US uninvestable. Because with these tariffs, we could see some further outflows. People start outflowing from US economies, US stocks, their portfolio rotation, asset rotation, outflows from stocks selling up there and going somewhere else where they can potentially get a better yield, where there's less uncertainty. Because look at stocks at the moment, they're moving in line with dollar. If we look here, US 30 capitalized on some shorts there on Friday as well. Look, break out the flag. Remember the structure I was noting. Look there, SPX, same thing. And look there with NASDAQ, all the same thing, breaking out these bearish flags and continue to extend to the downside. So they're moving in line with dollar. And what that screams, okay, again, what I'm just going to reinforce, that's markets, investors, big investors being they're uncertain because of those tariffs. They're playing that narrative of Trump making the US uninvestable. Okay, so this is why it's a roller coaster. We bounce, we sell the dollar, we bounce, we're selling again. But the way things are shaping up now, it does look very vulnerable. And I know sometimes people give me stick. They're like, oh, at the start of this year, you're a massive bull on dollar. Well, yeah, rightly so. I was a massive bull on dollar. I was screaming for that dollar upside at the back end of last year, 2024, in this Trump trade scenario, and I was right. But obviously, come the start of this year, we've lost some ground. Fundamentals changed. Shit happens, and our job. It's not my job to, you know, get it to predict the future, but at least have a very informed view of where we're going, but they remain agile and nimble and move with these changing markets because they're changing more than ever right now. This is the most volatility I've seen in a long time, even more so than the previous trade wars. This is very volatile. So dollar does remain vulnerable heading into this week, guys, and obviously it's a big week for the dollar because it's non-farm payrolls, it's the reciprocal tariffs as well. Jobs this time round are expected to soften. All right. We're expected to get this filtering through. These cuts, the federal layoff cuts, Doge induced cuts. So a slowdown there from last month's 151. 151 was already a slowdown anyway from the previous. We're gradually in this decline now. Okay. Now, unemployment rate, I don't know why this says 4.1%. It's expected to tick higher as well. I was looking at general forecast of 4.2. Okay, especially with these layoffs that we're seeing in the federal in the government, federal jobs. Wages expect to remain steady at 0.3%. Obviously, last month we did see that cooling after the previous revised low, 0.4%. But generally, we are on a little bit of a downward trajectory with the labor market. So we are seeing some softening. Okay, so we're seeing a softening in labor market. Inflation still remains sticky. So obviously markets are going to be fearing, like we've got with the Eurozone, like we've got with Canada, like we've got with kind of the UK, this stagflation situation. Growth slowing, but inflation remains sticky. Okay, so let me give you a couple of thoughts and scenarios quickly before we look technically again. These tariffs, if they come into play, either way, two sides of this. I kind of see it as both as a bit of a dollar negative. First side is the tariffs are not as bad as what markets feared. Risk on. Okay, so we start seeing Aussie rise, Euro rise, GP rise, stock maybe not. Stocks should rise really. Even I'm talking European stocks. US stocks may catch a bit of a bid. But if they're bad, these tariffs, that's probably going to be a dollar negative as well because it just goes back to Trump making the US uninvestable. So I kind of can't. I still really see dollar being vulnerable this week, guys, with those points being mentioned. All right. So keep an eye on this. We could see this coming under further pressure heading into Wednesday with those tariffs. Obviously, ahead of that, we've got the kickstart of labor market data on Tuesday. So we are seeing manufacturing, obviously, it's not a big one, but it's expected to remain in contraction, obviously, fall in contraction from previous 50.3. Should be dollar negative. Jolts are expected to cool a little bit. I mean, again, also generally speaking, you can see they're sort of slowing down. I know we had a beat last month, but previous was revised lower. So it's slowing down. So the dollar does look a little bit vulnerable, guys. Okay. Heading into this April 2nd. So I'll be keeping an eye on further downside heading into the week, start of the week, heading into Wednesday. Could be heading right down to re-challenge this zone here, this 103.50 towards sort of those lows there of 103.24. Now, obviously, Euro. So, guys, I hope you found value in today's video. This will be the last market update I do for a while, being posted on YouTube. As I always say, this is just a snippet which is taken from our community, so you can check that out if you wish. I will be coming back with some educational content in the not so distant future. So stay posted and stay tuned across my social channels and via the Discord, the free Discord, for information about what's incoming there. But other than that, do smash up that subscribe button, smash up that like button. Stay lit, stay blessed, and let's get it.